So what are we looking at in XLE? We're looking at similar to IWM. We're looking at a short-term opportunity here in XLE. The near-term opportunity, I mean, you always have to think of where are we within the confines of the trade setup. So there was a trade setup that came and in a way came and went already in XLE, and we'll take a look at that as I narrow down our time frame into the 2-hour. But I'm looking at a little bit larger picture here and seeing what we might be able to find in XLE. So most importantly, though, there's been a change that has occurred, and that we have the reversal scout that's turned back up. It turned up as a confirmation that we have a new daily cycle low in place. The pattern structure here on the weekly is still positive. We have found support within the textbook areas of the 38.2 to the 61.8. We have a weekly higher high. If we can stay where we are and close, that would be a weekly close above the prior high. That's positive price action. And it would surprise me if we had a left-hand translation that occurred in XLE, meaning that the peak of this dominant cycle occurred to the left of the idealized. So the idealized peak would be right here, smack dab in the middle. So this peak so far has occurred on the left-hand side. If it ends up that that's the case, that would be very negative, and I'll talk about what would make this more negative here in just a second. But what we're looking at here is this move that has occurred in XLE, and the reversal scout's turning up. The slim ribbon now has gone neutral. And I'm going to start doing some draws to get a sense around where these key levels are that would really change the dynamics of this pattern structure. So let's take this cycle here, which seems to be the dominant one, this black cycle bracket here. You can see the low here. Now, this was a negative breakdown that occurred, and that gave way then to further downside, which got into this fib confluence area here, and then we got a bounce out of the fib confluence inside of the cycle timing window. So what I'm going to do is I'm going to do a draw from the peak of that black cycle bracket down to the cycle low that just happened, and we can see right now that we've come into that 50% fib level, and there's some selling that's come in, which is common, right? So now what I'm going to do, though, is do a draw here to see where my key levels are on the downside. So we have some support that runs from about 90.15 to 89.18, what I would consider to be optimal support. What I don't want to see is have it get back below 88.47, because that would start to tell me that this short-term positive price action and potential pattern structure that is forming is at risk of breaking down. So what would be expected is that you'd get a little bit of a pullback here, and then we'll get another move higher. And so depending on how far we get down into these support zones, let's say because today we made a new minor high, right? I mean, this is the high of the rising phase so far. Well, let's just say we got down into that 50. Then the upside targets would be that top of, so this is our 61.8. So it would be about 92.35 running to about 93. So that would be the conservative, and then the optimal would be between 93.05 to 93.95. So I don't want to see a break too much below this 50%, because that's what I've done my draw right now. And if it does get below there, as I said, definitely don't want to see it violate the 78.6. But depending on where that next swing low forms is how you can then create your next fib extension to give yourself some targets on the upside. Now, what would I need to see that would tell me that the trade is a go? So depending on your approach, and this is an important topic when it comes to not putting all all the ammunition, firing it all at one time, right? Maybe looking at scaling into your analysis is something that I learned from Slim when I was an associate of his hedge fund, is that he would look at scaling into the analysis, and you would never put on a full position that first time, right? So it was all about the analysis and making sure the analysis stayed valid. If the analysis changed, then you have to make your appropriate adjustments to the position. So now what I'm going to do is I'm going to narrow down my time frame, and I'm going to go into the 2 hour and the 15-minute to get an idea there. We still have that negative reversal scout on the weekly. So I'd like to see that turn up. That would really suggest that we have a key, intermediate minor low in place. The reversal scout turning up gives me some better confidence with the slim ribbon going positive. But I would like to see that reversal scout, because right now, because that reversal scout is negative, you really have to be paying attention to what you would anticipate as your upside targets. Because when you have a negative reversal scout, and if it doesn't turn up, you can see here as I got close to that 38.2, it backed off. That was today. So somewhere between that, if it got up to that 93 area is where I would be starting to get cautious with that upside advance in the short term. And you can see how that matches up with that 78.6 that I identified earlier. And that's what I like to look for, are these confluences of levels to give me some confidence around potential exit points. Okay, so now I moved into the multiple time frame grid here again. I always like to do this to give me a sense of some deeper analytics, deeper analysis that I can do around the levels. Today we got into that key short-term support zone. So that's what you would expect, is that you would get a reaction from the sellers as you get up into those zones. What I'd want to see, it's similar to what was going on with IWM. I want to see the reversal scout and the slim ribbon turn back around, and maybe it's going to come into that zone I talked about, maybe into a key support zone. And then you would look for the slim ribbon in the 15-minute or the reversal scout in the 2 hour here to turn up. That could be a signal that next advance is underway. Right now, and you want to keep an eye on these other swing lows that are happening to give you so if I'm looking at short-term opportunities and I do the draws, and you see, this is what's interesting, is that, there's like a puzzle that is dynamically being produced by the market, and there's a piece by piece it starts to form, and once one gets completed, you have to wait for the next one to get set. And so traders that were looking at this near-term, short-term bounce or rally in the cycle timing area, whether they know about cycle timing or not, they were ready to come after XLE here. And this swing here produced a nice trade, right? So if I take my timing tool here and I measure, how long this trade took from when the reversal scout turned positive to then today, where that 78.6 was reached. And I do a couple different time frames. So this was 9 days, right? Because if you're an options trader, you have to have some sense around the length of time that your security, your instrument, the symbol that you're following behaves. Okay, or what is the common behavior patterns of symbols? Now from here, where it made this swing low, right? I just said that before. We don't want to be afraid of the pullbacks. The pullbacks, if you're in an uptrend and you're looking to trade long side strategies, although pullbacks feel uncomfortable, we have to welcome the pullback, because that's what sets up the next move. And it's a hard thing to transition yourself through. First and foremost, we have to make sure that we are really identifying a positive structure or trend, and it works the same way in a downtrend. But I'm looking at more of a minor positive pattern structure that started to develop as we've made now a new minor high, as you can see in this past 12 days here. Okay, so from here, where this swing low occurred, to today was 4 days. So that's why we really get granular with our approach. And it's that important, because if you're a near-term trader and you're setting yourself up for a trade that's going to take 3 to 5 days, you need to know what your targets are. And if your expectations are based off of daily charts or weekly charts, you're likely to be disappointed because as you can see right now, we already gave back, 50 cents or so as it tagged, right, spot on the money, that 78.6. So as I said before, you've got to think about how traders, are making a living. And for those traders that are, or just generating profits for themselves or opportunities, they have to have some logic to why they're getting out. And part of that logic is likely coming from key levels. Key levels are likely being generated by Fibonacci key extensions and retracements and so on and so forth. So if you're not familiar with those, it's one of the areas that you're going into trading sort of with a blindfold on. And askSlim is trying to remove the blindfolds that are there within the market dynamics, the underlying natural conditions that are happening, which are based on time, which are based on price, and understanding overall direction. Okay, so that was already a near-term trade that would have played out nicely over a short, few days there. And now what I would be looking at is from that swing low to that swing high. So there's 3 points, right? So I need 3 points if I'm going to use my fib extension tool. I want my swing low, I want a swing high, and I want another swing low. If I don't have 3 key, very visible, logical points, then I don't have the right information to be able to generate my swings. So this is now, it's a very clear level for me, okay? And if I can see the reversal scout turn back up, then I have an exit area, somewhere either below this low or this low that I'd say, okay, I got to take a step back again, and maybe this next swing is not there yet. And where do those swings usually take place? Well, anywhere from 23.6 to 38.2 is going to be, on the aggressive side, and then 38.2 to 61.8 is more typical. So this one that occurred here, you can see here, was right about 38.2 and the buyers came back, right? And we got this another little rally that has happened. Now we're getting another consolidation. So there's this constant battle between the bulls and the bears. All right, so my upside targets, if I can get the reversal scout to turn back up in the near term, short term, very conservative upside, be that 92.67 that you can see here. But where I think the greater magnet on the upside is going to be is this we have an intermediate fib retracement level around 93.32, which is a confluence with that fib extension of the 78.6. So that it would be in between this zone of 93.36 to then 94.25-ish. Okay, so that would be the upside near term, short term targets. And again, I would be wanting to look at where does that fit within the bigger picture. So I don't want to be surprised with where those are. 93.21. So it makes sense to me. I got to be careful here that, there could be some selling that comes in right around that 50% fib area. Also, though, if it got through there, you could see a fairly quick acceleration into that next target, which would be that 94.25, and even get close up to that 94.57, which is the 61.8. If we see a close above that 61.8, that's going to really tell me that there's a good chance that this is a key low, likely a minor intermediate low, and the likelihood of the next more dominant intermediate swing to the upside is likely underway. So that's something to keep an eye on. But right now, this is another one where I don't have the signal that would suggest the trade is a go at this moment. So that's always that final step that I take after doing all my analysis, is looking at it and saying, okay, what do we have right now? And I love using the 15-minute and the 2-hour to give me a sense of where we are, because I don't want to be trading against momentum. That's something that I was trained by Slim, and I think it makes tremendous logical sense. Buying something in, if you're looking at long side opportunity in a support zone, again, it has to be Slim. Start small. Maybe again using easy round numbers. If it's contracts and you trade 4 contracts or whatever the numbers are, or if it's 100 shares, maybe it's 25 or 33 as you anticipate in key area. But I would still, even if I'm anticipating, I want to have some confidence coming out of a smaller duration momentum time frame. So if I'm going to be anticipating, let's say in a 2-hour chart based on support zones, I don't want to be buying if the momentum is negative. That's just a way to try to prevent catching a falling knife concept. Okay, so there's a review of XLE.